UK inflation figures come in below expectations. Good morning and welcome to Morning Markets. The February inflation figures released today will provide some relief for the Chancellor, who along with the gilt market has been under pressure in recent weeks. Headline inflation fell from 3% to 2.8%, below economists' expectation for it to remain at 3%, and in line with the Bank of England's expectation. Core inflation also fell from 3.7% to 3.5%, helped by big downward contributions from clothing and recreation. Somewhat disappointingly, services inflation remained at 5%, continuing the theme of sticky services inflation but falling goods inflation. Following the release of the inflation numbers, markets assigned a 75% probability of another interest rate cut in May and a second rate cut before the end of the year. In recent weeks, gilts have been caught up in upward pressure on global bond yields resulting from President Trump's economic policies and a fundamental shift in the European fiscal picture. The release of these inflation figures provided some relief for the gilt market, with 10-year gilt yields falling by about 5 basis points this morning. But we're not out of the woods yet. CPI inflation could still reach 3.7% in the autumn, according to the Bank of England. And the Chancellor's spring statement today will need to allay investor concerns about the state of the UK public finances and the large volume of gilt issuance in the pipeline. Join us tomorrow when Matt will discuss the spring statement in more detail. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.